Welcome back to the program. Great that you're here today. Really thrilled with my next guest. Jim Mocci is a friend, and for the past 3 years has served as the managing director and head of marketing at EP Wealth. Prior to EP, Jim was VP Brand Advertising and Global Creative Services at Fisher Investments. Prior to Fisher, Jim spent 7.5 years at BlackRock in a variety of marketing functions. Prior to BlackRock, Jim was at Wells Fargo for over 9 years. A distinguished career with some phenomenal brands. Jim, welcome to the program. So glad that you're here. What did I miss on that career background? You've done a little bit of everything.
Yeah, thanks, Dan. No, I'm excited to chat with you today. And I guess that I've always been a financial services marketer. There was a little stint at Barclays Global Investors in there when BlackRock bought us. But I'm doing exactly what I love to do and what I was meant to do. I absolutely love everything about financial services marketing. Thrilled with the space and love EP and where I am at today.
Awesome, love to hear that. And we've met in person a number of times and chatted a bunch. And I know you really mean that. You love what you do, and I think you're very good at it. So, and I think the audience is going to enjoy hearing from you. So, let's jump in. First topic: tech stack. I was at T3 a couple weeks ago down in Dallas. Got to see some interesting new tech. I know you're pretty tech forward. So give us a picture of your growth tech stack. What do you use? What does it look like?
Yeah, no, I am tech forward, but I think it would almost be more tech aspirational, right? I think as all of us, there is a little bit of, we're navigating the systems we have and we're looking, where upgrades are available. And so, while I am a big fan and often engaged in tech, the full disclosure is as everyone is, we have legacy systems, right? And we have things that we're working through. So, the things that we have, something we just actually completed in our tech stack, which is huge for the firm, is moving to Salesforce, and both on the marketing side and FSC financial side, which is Financial Services Cloud, which is where our advisors work from and our CRA's ops service, everybody works from. So we are now fully integrated on both sides of the business, the advisors and marketing as well. We have a visual analytics platform. So we are able to, not only have data, but also present it on a regular basis in a way that's really usable. Of course, website, web forms, platforms. We have what I'll call a DAM light. It's not the traditional DAM, but we work hard to make sure that we can get our digital assets to where they need to be. When you have 200 advisors, it's important to be able to get those, all of those elements out and available and easy to find. A workflow tool that we use across the firm. And then of course, some ad trafficking type platforms that we have. So that kind of wraps up the tech stack, as we see it today.
Well, congrats on the migration to Salesforce. I know that's not a trivial task.
Yeah, it's a big one.
So you talked about visual analytics, and I know you are a numbers guy. So talk to us a little bit about what you're measuring as you look at different channels and bringing it to organic growth as sort of the main topic. Channels where you're doing some work in finding new leads, engaging with leads. What are you measuring, and how do you know if a channel is working or not?
Yeah, I think it's a great question. I kind of think about data in two ways, right? One, all of us marketers have a lot of data that I would put in the category of marketing diagnostics, right? So the things like click-through rates and cost per lead, conversion rate, likelihood to finish a form, all the things, right? Those are really important for us as marketers, but I almost wouldn't consider them business metrics, right? When we move over to the business metrics, we're looking at, the thing that we're really looking at is ROI. So how much are we spending in this channel? How much does it cost us to process a lead? And then in the end, do we get a client, and what are those assets, right? So we can do sort of a cost of acquisition, or what the number that we really like to look at is the cost per million of net new assets. So we really get down to looking by channel. What is the profitability of a lead source or a channel? So that I would put in the business metrics side. The marketing diagnostics are really, that's my team. We're using, sure, I share them some, but that's not, I can't expect the typical sort of business partners that I have around the firm to sort of geek out with me on click-through rates and other things like that. That's inside baseball. And then of course, you sort of asked about the daily, we watch lead flow, right? And so that's an important thing to keep track of is, are we generating leads and are we keeping our advisors busy, right, to the level they expect? And so, giving them opportunities for that organic growth.
I love the distinction, Jim, between the marketing metrics that you're measuring and then the business metrics. And maybe for a second we could just dive in there, because I think in your role you're looking at cost per lead, and you're probably looking at that on a source basis. Is this lead source comparable to this lead source from just purely cost per lead? But as those leads go through your funnel, you have a meeting book rate, you have a meeting held rate, eventually you have a win rate. Are you measuring that as part of your business metric? And I want to get to the cost per $1,000 or $1 million of net new AUM acquired, but are those sort of the key metrics that you're measuring through the funnel?
Yeah, and we're measuring from a building. We want to build a model and a way to forecast and predict if we continue with that lead source. And so while all the things you said, cost per lead, cost for a meeting, cost for a meeting with an advisor, all of the contact rate, those are all really important, but I'm not going to make decisions on those alone, right? The cost per meeting can be very misleading, as can cost per lead, if the conversion rate at the end or the amount of assets coming over are really different. So that's really why this idea of the cost per million of net new assets is really important, because it's sort of the end of the line, right? That's truly where the rubber hits the road. And so that's why anything we do ends up with that cost per million of net new assets. But certain lead sources, you can pay 6, 7, 8, 9, 10 times more per lead than maybe you're paying for a lead on Facebook. You wouldn't throw those out based on that until you understand all of those other subsequent metrics, right? And look at the cost per million. And oftentimes those expensive leads are maybe more mid-funnel, and they are actually going to win on the cost per million of net new assets. So I think it just highlights the importance of, you really have to follow the data all the way through.
Instrumentation and measurement through the funnel by source, critical. I think for any marketer out there. Would love to just dig a little bit deeper on that cost per million.
Yep.
Net new AUM. Where'd you come up with that? What's sort of the basis? I understand it's probably a very good tool to measure all sources equally, because the bottom of the funnel is winning that new client, and how much assets are going to come over with that new client. Because you could have a channel that maybe produces a new client that has $1 million, or another channel that produces a client with $10 million. They're going to be measured differently. And if that's consistent, we know where you're going to put more of your time and effort on that latter channel. But tell us a little bit more about how you got to that metric itself.
It became a lot of people talk about CAC or name the acronym, right? But the cost per client, which is great if every client is identical, but as we know in our business, they're not. And so it was just that sort of hunting through the data to find a way to bring it down to, in the end, cost per million is, or $1 million of AUM, you can predict revenue. So it's coming down to revenue. And if you're thinking about ROI, you're thinking about how much money are we going to make compared to the amount of money we spent to get it. And so that is really what cost per million is, in some ways a proxy for expected revenue versus the cost of acquisition. And so the story I always tell, or the example I give to make it really easy, is if we're charging 1% fee and you bring over $1 million, that's $10,000 in revenue in a year. how does your acquisition cost look against that, right? So if your cost per million of net new assets for pure marketing cost is way over $10,000, you've got a math problem, right? Like what is your retention rate like? What is the expected lifetime revenue? And you can start to unpack that and say, okay, this channel's worth it, or that amount that we're going to spend cost per million of net new assets is worth it. And I look at cost per million of net new assets that is just marketing costs. So literally variable cost of generating the lead. And so you have that number.
Got it.
And then we'll also do a fully loaded version, right? Which is the cost of the people in marketing that are focused on generating leads and the cost of the team of people we have that are calling leads to vet them for an advisor. So we'll also have this fully loaded cost. And then that allows us to, one, just have a sense of the profitability of those and when a break even might happen. Is it a year? Is it 2 years? Wherever it is. The other thing that does is allows us to compare against other channels. So custodian channels, organic, or, client referrals, personal referrals from advisors, even M&A, you can say, okay, the cost per million of net new assets, you can look at across all of those channels and you can say, well, marketing is doing great or not doing great. We should invest more in marketing or less in marketing, right? And so it also kind of levels the playing field with the firm as a whole and allows a marketer like me to make an argument for marketing, at the firm level.
The other notion I think that's interesting about the cost per million, and I love the example of $1 million, 1%, 10,000 a year. You could have a channel that maybe a great lead is going to cost you $1,000, and if you're going to convert at 10%, you could have a break even in year one, or maybe they're going to cost double that. So as your break even 2 years, and as you think about really that ROI, I suspect, and maybe I'm wrong here, but you're not measuring it just on 1 year returns. You may be looking at average lifetime of a client that looks like the new client acquired, and can probably dial up, dial down spend based on where those numbers shake out. Is that a fair?
Yep, that's right. Yeah, and we have an assumed lifetime value based on retention rates that we can, forecast out the lifetime and have a net present value of that future stream of revenue.
Right.
So there's lots of ways to sort of, gut check the math, right? Make sure you're doing the right thing for the firm with the firm's money that we're investing in marketing, and we're getting the right leads. The other thing it does, even just within marketing selfishly, is I can compare channels that are not like, I can compare events to direct lead generation, to Facebook, to our website, right? I can look across all of those and say, where's the next great place to spend dollars, right? It also allows for another thing that I like to say is the layer cake gets us to our goal, right? If we have a goal of whatever it is, some portion of your growth is going to come from lots of different channels, even within marketing. And so maybe I'm looking at purchase leads as part of that layer cake, and generated leads as part of that, and events as part of that. And maybe we have some podcasts and radio shows by advisors in a firm. And so I'm looking at all of those, right? And looking at the costs and saying, how do all of these channels work together to help us hit our goal? And that cost per million is that's a fair metric across any channel.
Mm-hmm.
And so in the end, it makes it easy to compare.
I love that idea of the layer cake, because you could have channels where, well, you could start the year with the goal. I need to add 100 million. I need to add 500 million in net new AUM. And you could have channels where that ROI, it's while positive, may require 2, perhaps 3 years of revenue on a new client, versus another channel that's 1 year, but there's not enough scale in that 1 year channel to hit that overarching goal that you have.
Right. But it also makes it easier for me to go back to the CFO or other people and say, the numbers are good here, right? Like if we're doing a true bottoms up kind of budget exercise, I can say this is a valuable channel. We're producing new clients at the price we want to pay. Mm-hmm. So, and I think I can spend X money. Can I have more money? Right. And it becomes that bottoms up exercise where I can prove through the data when when an investment is valid and valuable, right? And so we can have a budget discussion through that lens.
Yeah. Predictable returns. Love it.
Yep.
Love it. So let's hit the next question here, and that's just a little bit about testing. I'm curious to hear what channels or tools that you're looking at. Maybe you're starting to dig in, haven't had a lot of time to spend on, but what's on the horizon for what you're looking to test?
Yeah, we're always testing. So, kind of the test and control principle or methodology is constant, right? We're always turning things off and investing more in the ones that work. That's I guess a bit of a constant for us. But new areas that we're kind of leaning into, which these are, I think probably industry wide, but the marketing rule changed in November of 23, I guess, maybe,
Yeah.
right? And so testimonials kind of came in, right? And I think different firms have done different things, and they're not as ubiquitous. Testimonials are not as ubiquitous as I maybe thought they might be, given that rule change. And so we've been really working hard on trying to crack the code there, right? Like how to not only get testimonials, but how to use them. So that is an area of interest for us from just a pure marketing messaging. Where do testimonials do the hardest work? Is it to generate a lead, or is it to get someone through the funnel? So sort of doing a little bit of that work. Another area is data enrichment, right? So we've got a bunch of leads that didn't become clients. So how do we learn more about them? There's information about existing clients we might like to have, and then there might be scoring that we want to, have to new prospects to come in to help us prioritize. So really looking at opportunities for enriching the data that we have. Lead sources is, that's my whole life is going to be spent testing lead sources, right? So that's always something that we do as growth marketers. And then of course the more ads and changing targeting, right? That's another one of those that we're always, working through. And it's important to work through because even, take it now, where we're sitting in the beginning of the second quarter, volatility is here. And messaging, there are opportunities for your messaging to reflect that, right? And so there is message testing and ad testing that is really responsive to what's happening in the world. And then there's maybe more of that evergreen type messaging that you would want to test and work through. So I think those are kind of the four areas that we're, thinking of testing.
Yeah, I love it. And that last one in particular, that messaging, ad units relative to what the market's doing on a daily basis, it seems like, you need to be prepared, ready, have the right message for how folks are feeling. And the ups and downs, you got to be empathetic, and that message has to resonate with your audience. So love that. Thanks for sharing. You didn't mention in there AI.
Yeah.
I suspect some of the tools that you're probably looking at leverage AI to deliver what they do. But anything you're doing specifically in AI that's playing a role in your work today?
Yeah. So it's funny that I didn't mention it now that you flagged that, because in some ways we're using it, right? So we're kind of in a lot of ways we're past the test, but I would say we haven't used it enough yet. So the ways we're using it are probably the ways that a lot of people think about using it, right? There are efficiency plays. There are, whether that's writing, creative, or presentations, right? So if it's something as simple as a ChatGPT helping you retool a paragraph or a line or whatever it is, there is on the creative side, we've used a good bit of AI, whether it's generating images, helping us create video, edit video. And then of course, presentations, right? In marketing, at least in our space, presentations, PowerPoints, things like that can be a burden in terms of just hours. And so trying to leverage AI to help us hey, turn this shell of a presentation into some working slides, and then we can edit from there. So we've really kind of embraced that as well. my whole team loves it, right? We're going to have more licenses for presentation building, than I was ready for, because it really, that is helping enormously on the team. And then there's the sort of the messaging that we use internally. We've not fully embraced having AI help us write external messages. We still like to write those ourselves, but internally, if we're creating quick emails, announcements, internet posts, we might, use some AI to help us out there. And then the final one that is, I think, AI that we've all probably been using for some time, is the idea of, like regression models, lookalike modeling, things like that, and ad targeting, right? And the big platforms, the, Googles, the Facebooks, you name them, they're ready for those signals, for us to send the signals back to build the models to enhance the way we target. So whether it's sending a signal who clicked on an ad, that's one way to create a model. Clicked on an ad and completed the form, that's another model. Clicked the ad, completed the form, and held that first appointment, that's another model. So, we really try to embrace that sort of the improving targeting through AI and modeling.
It seems to me that as a piece of technology, AI it's pretty pervasive in the tools that we use on a daily basis, and it's almost like it's not AI for AI's sake. AI is really the enabler of the technologies that we're using. I think you gave a number of great examples there. And appreciate that background and your perspective on it. I want to shift into this notion of brand marketing. We don't talk about brand a lot. When we talk about organic growth, it's usually about technology. It's usually about lead sourcing and measurement, and a lot of the things that we've talked about in this conversation. But brand is the promise you make and the promise you keep. And curious to get your perspective. You've worked for some pretty amazing brands in your career. How do you see brand marketing playing a role in organic growth today?
I think brand is really important, but I think it's important to also define what you mean by brand. There's brand advertising, which can be important for some firms, but I would argue that brand advertising isn't important until you cross some point in your growth, right?
Mm-hmm.
I would say where brand is most important for the majority of RIAs, or wealth managers, or in our space, is your value proposition, right? So how does the value you provide clients come to life through your messaging, which is your brand, right? So getting crystal clear on what you stand for and the value you provide clients and how you articulate it, that part of brand, I'm all in on, right? That could be from the smallest shop to the biggest shop. I think that is true. It's particularly valuable internally, right? That idea that your brand and what you stand for, and making sure your team and everybody understands and kind of says it the same way, is critical. So I'm a huge fan of brand in that respect. When it comes to brand advertising, and I have worked on, at some of those firms you mentioned, I worked on some big brand advertising campaigns and got to see the benefit of it. But not everyone's ready for that, right? Not everyone has that scale. Mm-hmm. Not everyone can have those budgets. Not everyone can sort of build that out. And even the places that I worked that spent a lot of money on brand, none of it was a vanity play, right? It was always, how does brand affect the business? And in fact, you might even say, like, how does brand impact our direct response funnel, mm-hmm. right? Do we get more leads for lower prices? Are they more likely to hold a meeting? Are they more likely to convert? So I think that it's important that brand is not, I think some marketers can kind of fall into this trap that brand is what we talk to each other about, or that it's kind of a measuring stick. But I would argue the opposite, that brand is a very specific tool that you should use. Brand advertising, I should say, is a very specific tool you should think very closely about using, because you can really do a lot of heavy lifting with on the direct response side.
Yeah, love that. Certainly different for firms like yours and others versus some massive CPGs out there that desire to have, a minimum of 3 brand impressions per human being walking the earth right now.
Right.
It's a different game. And I love the notion that you brought brand internal, because it's as much as the employees think about who the company is and what that brand promise is, and how that translates externally. Appreciate that one.
Yeah. I think that's really a superpower for a firm, is if you really know your messaging and what you stand for and how you're different from the competition, and you can articulate that regularly. And if you can get prospects and clients and COIs and other, everyone to understand and even repeat that, then that's a real win.
Yeah, and to the point where it comes naturally. We can write all the scripts we want, we can write all the copy we want, but that stuff has to come naturally. And I think internally we all have to believe it first before we can expect anybody externally to believe it. So
yeah,
appreciate that. So last question for you, Jim. We're gonna jump in the time machine and ask you this: if you knew then what you know now, take yourself back 5 years. I know you've only been at EP for 3, but pretend you're at EP. It's 5 years ago. What would you start working on now 5 years ago?
Yeah, that's a great question. Well, I was, before you said pretend I was at EP 5 years ago, I was going to say 5 years ago, I wish I went to EP sooner, but
Well played.
But I would say this is in some ways an unfair answer, right? Because the reality of all of our busy marketers' lives is I think doing more in parallel, or at least planting seeds so that things could be sequenced more tightly together. When I started at EP, the team, my team wasn't as big as it is now. We had to make bets, right? We had to pick certain things, and we did that, and we did it, successfully and with a lot of focus. But what that does is, there's opportunity cost. There are things that we didn't move forward, that now we're moving forward. But of course, you can wish all you want, but it would be great if some of the things were further ahead today, right?
Yeah.
It's just part of our business moves so fast. And to compete and win, you have to move everything has to be working. And so, that I would say that's the piece that I would, if there are other marketers out there that are in that, like, we're coming out of the small RA phase, we're having this path to be big. I need to make some focused bets, but there are some seeds I should be planting in other areas now, so that you have a little bit of a running start later.
Yeah, somebody at some point last year was telling me they don't think about their work in terms of wins and losses. They think of it as wins and learns.
Yeah.
And so, there are things you could have done, 5 years ago, could have been testing to get those learns, to equip yourself, empower yourself, educate yourself on what might be more valuable down the road. So appreciate it. I know it's a bit of a tough question to take a retrospective in the past 5 years, but it's fun to think about.
It is.
Jim, really appreciate your time today. Thank you so much for joining us on the program. Always appreciate hearing about stuff that you're working on, your role, and how you're driving growth at EP. Pleasure to have you on today.
Yeah, it was great. Thank you.
Thank you for listening to the Grow Organically podcast. If you enjoyed this episode, click the follow button to be notified when new episodes become available. Visit Catchlight.ai, where you can access all our podcasts, including show notes and other resources to keep learning. This podcast was produced by Catchlight Insights, LLC. It is for informational and educational purposes only. The content of this podcast does not constitute an offer or recommendation of any securities and is not intended to provide tax, legal, or investment advice. The views expressed are those of the speakers and not necessarily those of Catchlight or its affiliates, and are as of the date indicated, based on the information available at that time, and may change based on market or other conditions. Catchlight does not assume any duty to update any of the information. Catchlight and other third parties mentioned in the podcast are independent entities and not affiliated. Catchlight does not endorse any investment advisor or provide advice or recommendations to any prospective or existing client of an investment advisor as to the selection or retention of that investment advisor. This information is not intended for any person or entity in any jurisdiction where the distribution or use of such information would be contrary to local law. Third-party trademarks referenced herein are the property of their respective owners. All others are the property of Catchlight Insights, LLC. Copyright 2025, Catchlight Insights, LLC. All rights reserved.